Good morning, Daily Rip crew. Am I frozen? Oh no. Oh wait, no, we're
You are
good. I think it'll fix itself. There we are. We're
fixed it, bro.
good. Let's go, baby. Good morning, everybody. Welcome back to another episode of the Daily Rip. It is a big day in the market. If you don't already know, it's FOMC day. We got the big FOMC meeting happening today. Jerome Powell is speaking 30 minutes after the meeting. It's going to be at 2 o'clock Eastern, and then 2:30 Eastern. So big stuff today. It's going to be fun. Markets are already moving. We got some decent movement overnight with futures and nice pops, but things are pretty much back to flat that I'm looking at right now. Small caps kind of holding that pop overnight pretty nice, and Bitcoin just hovering around that 105K again. So good start to the morning. It's going to be an exciting day. You ready, Shy?
Yeah, I am. I'm ready for some volatility to kind of return back to the
Can we get
market.
VIX over 20 maybe?
Oh, that'll be juicy.
That would be juicy.
But I do think that the FOMC today, it's going to be somewhat of a nothing burger in my opinion. I do think it's surprising how not the odds, but the anticipation of Powell being more hawkish than dovish is surprising to me because I'm not really seeing any kind of data that backs that up. But right now you're seeing the market kind of price that in, and that's why large cap tech is doing really well. However, I do think if I'm part of the camp where nothing really is going to be revealed today and it's not going to be hawkish or dovish, I think this is setting up for IWM or small caps to outperform the rest of the week because the breadth has been so freaking poor. It's just been large cap tech. I do think that changes, and we'll
And
see.
take a look at it on this dip with the market
Yeah,
right now coming in pretty hard and small caps holding really well here. So
yeah,
goes along with right with what you're saying.
that's kind of where you want to be. Like even right now, Q's just I don't know what happened. The macro data this morning was poor, but Q's are red now. They were up 0.3%, so they're red. This could be a combination of I don't know. Tesla's down 3% pre-market due to not a downgrade but a price target decrease. Again, we made this comment yesterday where FSD is a $300 stock price increase for Tesla if it hits the max potential. Right now, as of yesterday, that was like, I don't know, the stock went up like 200 something dollars since the election. It's like a lot's being priced into the stock right now that isn't really backed with any fundamentals. It's just the Trump trade. So when a stock goes to re-rating on with no fundamentals backing up quite yet, it's going to be a little volatile. And you're seeing this price action like down 3%. But guess what? It's still above, like check notes, down 3%. Where is it at from previous high, Friday's high?
Well,
Like
that's
this
the
is
thing. We keep
nothing.
taking these highs like we are in Tesla, and obviously, like, yeah, we want to see it keep going and hold the moves it's making. But the farther it goes like this, and the quicker it goes, I mean, if we end
Mhm.
up at 500 by the end of the week, here's the thing: like, that's great, but we can't be mad about seeing a pullback to 420, and that would be totally normal seeing something like that, right? And it's just, but it wouldn't feel like it, right? Because we're already so far past that level. But just a month ago, we were trying to get over that, right? Not even so. Something to watch out for there for me is like, okay, we can trade, like you said, the Trump trade, kind of play the hype right now. Obviously doesn't mean Tesla's a bad company. I obviously love Tesla, but there's gonna be a little bit of a short-term pullback after this hype kind of does die down a bit and it gets down more to just the fundamentals of the stock, right? So just I'm keeping my eyes peeled because I'm ready for the dip whenever it comes. There's a lot of hype right now and things are they're just going nuts. So
I think everyone's waiting for Tesla below 300. I don't think that's going to happen. I think 400 is a good buy, but
yeah.
just look at it. I don't know. It's different scenarios, different macro, but like February 2020 in Tesla stock, they entered a similar on the weekly chart. They entered a similar overbought RSI of 80 plus, and it had a nasty pullback, nasty. But it's a different company than back then. Back then it was EV. Now it's AI and software on top of it with energy. So it's a different business. However, you can see there was a vicious pullback. And then guess what happened after that pullback? It just roared in 2021, 22, 23. So I think it's somewhat of a similar scenario that maybe I could see it pulling back to 370 as like the vicious pullback, maybe even 305. Like I think 305 is a stretch, but 370, that could be the buyback level before it hits 500, 600, 1,000. Like that could be the pullback before the massive move. And I kind of want to see that, even though Tesla's my number one position now. If it pulls back to 370, I think that's really healthy because it's gonna give it more volume, more like fear, and it's also gonna create more volume profiles. Because right now, it's trading and it's in price discovery mode, and price discovery mode
It doesn't know what it
usually
wants right now.
exactly, and scary. A lot of traders don't get involved in that because there is no volume shelf, there is no technicals. It's in pure discovery mode, and that's when euphoria kind of occurs and bubbles burst. You don't really want that in Tesla stocks. Like it'd be nice if it consolidated, maybe pull back a little, and then we get a new range, and that's kind of what I'm hoping for.
That's something, yeah, I agree. I would love to see that on Tesla. Something, not necessarily a bunch of downside right away, right? But if we could see some just sideways price action holding, right, that's healthy to me, especially after a move like that. But let's hop on over to the daily rip and get some recaps from the market yesterday. Do we have that on the backstage, my boys?
I'm looking right now.
Maybe not. I don't think they're in the back doing the screen share, but that's all right. We can just keep riffing. But
Yeah, let's see what else we have out
what else
there.
are you watching right now? Obviously, we talked a lot about Tesla there, and I mean, we're gonna keep on going with that. But Coinbase, have you looked at that? Oh, it's kind of pissing me off. I don't know.
Coinbase is just one of those names where I don't know.
We have
It
gone
feels
sideways
gambling.
for a
It's just
big minute
always
here.
sideways. And it's just like one of those things where just I don't know, buy Bitcoin, but if you want more alpha than Bitcoin, then just do micro strategies because that's when um that's the alpha. But yeah, we have our backstage back. So let's go to the daily rip, see what happened yesterday, and make some commentaries on that.
Oh, sounds good. Yeah. I was just looking at that because from Coinbase real quick. We're day 36 of sideways consolidation price action. So gotta love that. It's ridiculous. That's actually crazy. Here's the heat map from yesterday. Nvidia continues to get that downside, and we saw Google, Amazon, Meta, some of the normal names that have been ripping and kind of carrying the market, especially QQQ. Those were kind of coming in yesterday. Tesla continues to rip. We're seeing a little bit of just consolidation and pre-market this morning. So, over the past few days, Tesla has very much opened over the previous day high and held pretty well. Whereas as we're seeing something a little different this morning, so something to watch out for there. But a lot more red coming into the market. We saw AVGO down 3.98% after ripping on earnings. Obviously, given the move it had, it's not too bad at all, but definitely coming in a bit there. Any thoughts on the heat map from yesterday, Shy?
Large cap tech focused.
Yeah.
You're seeing this. I mean, first off, again, the more I say this, the more comedic it gets. Like Apple, what's happening? What every day it's just green, green, green. RSI's overbought, but yeah, um, yeah. I'm seeing right now software's kind of having somewhat of profit taking, which is surprising to me, mainly because I thought there'd be more. Like we had an explosive past couple weeks in software due to the stage two of AI being validated in this earnings cycle. I thought there'd be more of a positioning entering the new year, but we're seeing somewhat of profit taking, which is weird to me. But I also do think after today's Powell's press conference, I think the risk on environment is going to be back at play. The breath's going to widen, and software and small cap, mid cap growth is the names to watch, in my opinion, at in the power hour. And we'll see where it reacts then. I almost think an interesting pair trade would be, I don't know, shorting, not shorting, buying puts on Apple. I'm like actually looking at buying puts
You
on
like couldn't
Apple.
even finish the ticker name barely.
I just hate buying like trying to predict tops on the stock. But like even like yesterday or 2 days ago, like Broadcom, I was like, I want to buy puts. I
Well, have
should
you
have.
looked at the contracts? Are they abnormally cheap at this area?
They are
Because that could be a
for
little bit of a tell.
not Broadcom, but Apple there is. I will say though, like software names, their IVs are spiking a bit on their contracts. Like Palantir, for example, their IVs usually around 62 to 65% on the March expiration, June expiration, 72% now. So I think that tells you a lot about like what the price volatility is going to be in the near term. Another name was Tesla. Tesla's substantially higher their IV now. So like even though these names are running and you feel like they're going to come back to reality somewhat, the IV and the contracts are already kind of pricing that in, that juice. So now the risk and reward isn't what it was like a couple weeks ago, even if the stock has gone up. Like it's just that's the tricky thing about Greeks within contracts that like you really need to understand, and why I never suggest uh, puts or calls or options to a lot of investors or traders, because you really need to have that experience and understand what goes behind these contract prices. See if you're overbuying, overspending on the premium for a contract, on a risk, on a hedge or a call, because if you overpay on a premium, if it's 10% juice, stock doesn't go anywhere. The time decay on that contract gets destroyed, because not just the price doesn't move, that IV is going to probably return back towards the mean, and now it's a double-edged sword where you're going to be draining that capital in that contract. So it's a risky environment for those two names.
100%. Moving on, what's behind the Dow Jones dive? Your grandfather's favorite index, so I love that, is down 9 days in a row, which is nasty. Jeez. As the market's latest strength has been isolated to mega cap tech stocks, it's the longest stretch of downside since 1978. United Healthcare Group, the second largest component of the price-weighted index, is driving the weakness. The stock has come under pressure over concerns that the incoming Trump administration's regulatory overhaul will cut into healthcare profits. So obviously, we've seen UNH get that hit. It's been nasty, and Dow Jones is going along with it, right? So interested to see if that continues. Obviously, I know you don't have too many thoughts, Shy. With
Well,
that,
I just think grandparents are too busy buying gifts for their grandkids in
yeah.
the holiday season.
Yeah, they're not in the market. Some noteworthy pops and drops. Nissan up 11%. I didn't know Nissan was public.
I
This
think it's
is
probably Japanese market.
very, very, yeah, probably. Nucleus up 755%. Damn, the fintech firm acquired a 51% controlling stake in Star 26 Capital Incorporated. Interesting there. Root Incorporated up 2%. Pfizer up 5%. I saw that in the heat map. Pfizer getting a little bit of a pop yesterday. Interesting there. We got Teva Pharmaceuticals 26%. A lot of movement. We've seen a lot of movement in the pharmaceutical companies on these charts lately. So something to watch out for, right? You guys have seen us, on these noteworthy pops and drops like every single morning, and every single morning it seems like there's names in the pharmaceutical space. So a lot of movement going on there. Also in biotech, Shai's talked a lot about biotech. Portage Biotech up 183%. What was that from? The clinical stage immuno-oncology company has entered into a letter of intent with Immunova and a biotech firm to negotiate a potential deal involving Portage subsidiary Ilex Therapeutics. Interesting. Shai, you got any thoughts on some of these names? You've been talking a little about biotech. I wonder if you were keeping an eye on that one specifically.
I mean, not on that one specifically, but I think it's really interesting call out where in the past like year or 2 years, a lot of these small cap biotech companies have gone in positive clinical data, but really hasn't reacted. The stock price hasn't reacted the way you think on that positive clinical data. That time, those days are over. I think when there's positive catalysts that get revealed, these names are actually finally catching that bid. And I think that is kind of where you want to have somewhat of your speculative plays in, because the risk and reward is just really juiced up for the reward side, in my opinion. And I think Pfizer also made an acquisition in the GLP-1 space this morning. Don't quote me on that, but I think that's also helping them catch a bid today. And that's also why I think Viking Therapeutic, VKTX, is down 7% pre-market. So I think you're going to see a lot more of these M&A in biotech. There's a stupid amount of dollars, working capital, that's going to be at play now due to the lower interest rate environment, that they want to capitalize on some undervalued quality biotech firms who would be able to juice up their pipelines if they acquire them. And that's essentially what these big pharma companies want to do. All they want to do is make their pipelines more clean or juicier to the street because you have to treat, let's just say these big pharma companies like the Yankees or Dodgers, like a lot of times these organizations, especially the Dodgers, like they're valued based on their farm system, their minor league system, and you know what the future is going to be, how like be for that Dodgers because you're confident in their farm system. They can leverage that for going forward on trades or whatever it might be. It's the same thing for big pharma. Like everything's based on their pipelines. Like they have their bread and butter drugs, their star drugs right now in the market, but always you want to know what's the next thing, and the way to figure that out is in their pipeline, aka farm system. So that's why they're going to be very aggressive on these acquisitions because they haven't done that in the past 2 years. It's been a pause on all M&A essentially. Now they need to like refuel that pipeline again, and that's why there's going to be a spending spree in 2025 in the small cap biotech space.
Yeah, obviously we got big economic data today. Jerome Powell speaking FOMC press conference. So don't forget about that. Make sure you mark that time, 2 o'clock Eastern, 2:30 Eastern. You're gonna see some volatility pop into the market. So just be careful. And another thing to be aware of, since we're seeing volatility pop into the market at that time, and everybody's kind of waiting for it, you might see the market be a little quiet right into the morning. I'm expecting maybe a little bit of a morning move that we can capitalize on, but overall, I'm not going to be pressing the gas pedal super hard. I'm not even going to be around for FOMC later personally, so it's kind of like probably no trade day for me unless I like something here in the morning. So again, just I think staying out of that chop early on, unless the market's really giving you some good opportunities. I think that's best until the FOMC print comes out. But Supreme Market earnings as well. OGI, General Mills, JBL, Birkenstock, those are all in the pre-market here. And then MU tonight, that's going to be probably the biggest one that everybody's watching. Micron, I know Shai's got some thoughts on that. But then as well, we got Lennar, Steelcase, Worthington Steel, and then Miller Knoll. But yeah, I know you got some thoughts on Micron, if you kind of want to share any other things there. I know we already kind of talked about it over the previous shows, but if you want to share anything else there, feel free.
So Micron's interesting because they're incredibly undervalued right now. They're trading at 12 times earnings. That's essentially a 60% discount to their peers in that semiconductor space, which they're all trading around 25, I think was the median. So why the discount? I do think there's a lot of chatter about the commoditization of memory. I think you're seeing some geopolitical risk being priced into their stock due to China. They're heavily exposed in the China heavy China exposure, and they also have intense competition via Samsung and SK Hynix. So like, I do think there's a lot of FUD that's being priced into the stock, and it's being reflected on their valuation. However, I do think what's being underestimated is the memory chip components of what NVIDIA's Blackwell chip's going to require. Like, it's going to be one of those, like, as you innovate these chips, these memory, let me describe this. The memory capacity is going to be even more demanding on every chip that's going to get innovated. The compute has to get even more powerful. What's that going to entail? More demand for memory capacity. So Micron is uniquely positioned to benefit off that. So the argument really is, like, if this is an interesting play, if you're bullish on Blackwell chip, if you're very bullish on Blackwell chip and it's going to continue to have NVIDIA thrive and the demand's going to be sold out for years to come, like, Micron will benefit substantially from that. But these headwinds, like I called out earlier, is going to consistently be there, but you have to, like, be able to value their tailwind, which is the Blackwell chip is going to surpass that. And even if Micron doesn't deserve the median valuation of 25 times earnings like their peers, even if they get to like 18 times their earnings, they're still going to be discounted, but that's going to reflect a 50% increase in their stock price. So that's why I do believe that Micron is going to hit 150 sometime in the next 6 to 12 months. And that is going to be a 40 to 50% gain because they're just so undervalued. And I think the FUD is way overblown and people are just forgetting about the actual immediate tailwinds in the stock.
Yeah, good stuff there. By the way, just shout out to the chat on YouTube. We see you guys. CR, Jesus Trades, Black Beauty Machine, Paulito, my man. Everybody popping in. We appreciate you guys every morning. Shout out to you. We talked a little bit about Dow Jones, just not looking too hot. You see that 9-day losing streak. That just looks really bad, but still within this kind of channel they got on chart art here. So something to keep an eye on, whether or not we can hold kind of the bottom of this channel or get breaking downside and get some more momentum to the downside there. So I'll be keeping my eyes on it, but your grandpa's probably watching it more. Oh, Lowe's. Gosh, I haven't looked at Lowe's in a minute. I'm gonna have to take a look at this on my own charts as well. But looks like we're trying to break that key support of 260 or so. Looking like that was the bottom of this range we've been holding, and now we're getting a breakdown. I could see this potentially testing those previous highs if you just look left on that chart there. So, yeah, downside momentum not looking too great. Walmart's definitely doing better. So, you got any thoughts on Lowe's, Shy?
I don't. Maybe it's some high level commentaries like there's something off with the real estate market. Like the rates are going lower, and you assume that I don't know, real estate's going to pick back up. It's not. So like people are still not selling their homes. And I think that's what's probably affecting Lowe's um, stock price. But that's just my 2 cents. I am not. That is not my edge. But that's
Yeah.
what my gut's saying right
I
now.
will say we're not
looking at the
getting any
chart.
like real strong break of this range yet. We are like breaching that level for sure, but no real momentum that I see on the chart stepping in quite yet. So I might not be over quite yet, but something to watch out for there if we continue that momentum to the downside for sure. S&P coiling for a year-end breakout. So everybody's kind of watching this, me included, everybody, right? We're watching to see if SPY wants to get that one last rally into Christmas for the Santa rally, or just kind of maybe go sideways and drift more to the downside, right? I'm watching for either way. I really don't care which way we go. I'm happy to trade it either way if there are clear trades for me to take, and if not, I'm really just sitting out, enjoying, watching price action. We'll see what happens today with FOMC and the volatility, and I'm just not doing too much. But I definitely think we could get this little end of year rally. Just depends on the break of structure, right? What's happening with price action as of now? Price action still holding. We're consolidating after ripping all year and one last impulsive move to the upside here, and we're holding that and just going sideways now. Something for me is like SPY is under these December NFP levels, which I don't particularly like for the long side, but you see QQQ well over those December NFP levels and holding, and those are big for my trading personally. So seeing that QQQ is so far extended above those levels, even though SPY's under it, I can't sit here and be confident in trying to short SPY quite yet with size, at least on these, when you look at these daily charts, right? Because if QQQ is holding that strength, we still have potential to reclaim these levels on SPY, right? So, and then if we reclaim, that December NFP low and can really get closes over that on the daily, I definitely see us getting a little bit of a rally into the end of the year. 609.07 is the all-time highs. I would like to see a break of that and get over those NFP highs, right? But for me, I'm watching QQQ a lot more right now because this is the one that needs to kind of make the decision, right? Are we going to pull back and get under NFP high? Or are you going to try and continue to drag SPY up here? But seems like from last week, SPY was kind of the leader on the downside move. So again, I'm trying to figure out there's no way to really know. You just got to watch the price action and take it as it comes, right? But I'm trying to figure out okay, is ES now lagging, right? These moves to the downside, it was leading the moves to the downside, but now is it lagging and QQQ's trying to drag it up, or is it vice versa? Is SPY truly leading this potential start of a nice downside move, and Q's is just getting this pop to later follow, right? So that's kind of where my head's at right now, going into the end of the year with S&P. I know, Shy, you got kind of maybe similar thoughts, but what are you thinking there?
Yeah. So my thesis is large cap tech is going to pull back in Q1 of 2025. I think the breadth is going to widen substantially, and I don't know if the indices correct like 5 to 6%. Like I really don't think that like software, small cap, mid cap growth is actually going to pull back more than that. I know it's a weird divergence. Usually, if SPY and Q is going to be down 5%, like small cap, mid cap is going to be down 10 to 15. I just think the breadth's going to widen substantially in 2025. And I do think SPY is going to hit 580 sometime in the first quarter of next year. So like what Jordan's saying, like I don't want to really make any kind of, I do have a hedge in June. I think I mentioned that last week or or so ago, I do have some SPY puts for June. I, based on my thesis, called out. However, the reason I did it last week specifically was IV was substantially lower than what the mean is. So the VIX being at a 13 handle, I think maybe even touched a 12 handle at one point. I was like, looked at the IV on SPY and Qs. I was like, whoa, this is way lower than the median. So like even if the indices don't really move much, I do believe volatility is going to return back to the market and the IV is going to spike on those contracts. So it gives me some more wiggle room on like I got a good deal on these contracts due to the Greek underlining it. So like I'm willing to eat up the opportunity cost for 2 or 3 weeks if my thesis is Q1 because I got a good deal. Essentially, it's like a fire sale that occurred, a Black Friday sale deal on the Greeks within those contracts. So I do have those puts, but I don't think the stock market's going to really pull back substantially until Q1 of next year, and that's why I bought some time. I have my expiration is 7 months away. Like I am, time decay is not going to be much of a factor for next like 1 or 2 months. So I do think SPY is one of those names where like you have to ask yourself what is the next catalyst to kind of take it to the next leg, because on a valuation perspective, it is way above what the median is for price to earnings, like substantially above. I think like 15 or 20% actually. Last time I checked, don't quote me on that. So I think a lot of the AI or quantum compute, not quantum computing, but more of an AI benefit that a lot of these big tech companies are getting, it's being priced into the stock right now based on valuations. That 15 to 20% premium is purely AI, once in a lifetime tech revolution that big tech's benefiting substantially from. What's the next catalyst? It's not going to be quantum computing because that's still what Google and Willow revealed. Google's Willow revealed a week ago. It was purely academic and it was substantial for the whole thematic, but we're years away from that monetizing for big tech, years. And nuclear energy is 5 to 6 years out for a lot of these data center plays. Like you have to ask yourself, like, what is next? And it's not going to be anything that's going to move the needle for large cap tech, in my opinion. It's going to be more of the software, like it's going to move the needle for software and mid cap, small cap, because their base is substantially lower and their environment has improved drastically recently due to Trump-led presidency, business spending's back, interest rates lower, etc. That's the place to be. Large cap tech, you have to ask yourself, what's the next thing to move the needle? And I just don't see that in the next 6 months. I just really don't.
I am with you, Shy. We got 2.5 minutes here or so until the open. Again, I'm just really not expecting too much. I would like to see a little bit of a morning move. Maybe something like yesterday. We caught a nice little morning scalp yesterday on NQ, but really not expecting too much until we get that print and then see some volatility. And again, I likely am not even going to trade it. I don't even think I'm going to be around at the screens at the time. So just be safe today, guys. Gotta follow your rules. I think a lot of people would, I don't know, I used to talk to a lot of people and they would be like, oh, like I'm changing my whole plan for FOMC. I personally don't change a thing if I do trade FOMC except for sizing, right? That's the only thing I'm going to change. I'm not going to look at the market any differently. I'm not going to try and trade any differently, right? The only thing I'm going to do differently is bring that size down, because with the volatility that's at hand, it's like you don't really need the size anyway, right? The moves you're going to catch are going to be so much faster and quicker most of the time that you really don't need to have the size on to make the type of money you would normally make like you usually do. So just something to think about there going into today. Got to be careful. Got to make sure you're keeping that risk at bay, especially on a day like this. And if that VIX keeps picking up, it just means those candlesticks are going to be more and more and more violent. And, you're usually trading, one candlestick that you're like, oh, that's a fairly big candlestick that I can handle. And then it's like, oh, FOMC comes and all that volatility comes and you realize, okay, one candlestick can actually just take me completely out. And you got to be careful for that because you don't really notice it until it just happens to you, right? So just got to be careful. Play safe today. There's no need to go crazy and try and make a bunch of money in one day. That's not how things go.
I hear I read stories like, oh, I can't really afford gifts for my family or grandkids or friends, etc. Like I need to like kind of put my foot on the gas pedal to make that dough before the end of the year starts because it's a favorable environment. So like, don't do that. In my opinion, like don't, like that's Gambling. It is gambling. Those short time
I mean,
windows.
you
But
hear almost every trader on Twitter right now. They're talking about how hard the price action is in December. It's not the time to risk on. There's the bell. Let's go. Open it up. Getting a nice little bounce here so far. We're right at these overnight lows on NQ.
and I'm looking
Basically,
at
so I'm
Tesla
keeping an
right
eye on
now.
that. Yeah. Tesla coming in a bit. We got a bit of a range to deal with there from yesterday's low and high. I feel like we could see some just price action in between that today. Those levels, a little bit of an inside day. Maybe take a breather on Tesla for a bit. I think Nvidia was getting Nvidia got a nice bounce overnight, consolidating, healthy look to it. Back to November NFP low. That's 134.02 on the chart. So we're just kind of going sideways as soon as we hit that level. But I'd like to see Nvidia, for the long side at least, hold yesterday's high and maybe get some continuation to the upside here. Again, though, it's just hard to expect too much today from my side, where I don't think too much is going to happen until we get that volatility. But sometimes you get surprised. I've had a few times where I'm like, oh, wow, I don't even want to trade FOMC. I did so well this morning, right? And that's the best position you can actually be in, is if you take some good morning trades and you're like, I don't even need FOMC. It's a good day in my opinion.
100% agree with you on that.
Yeah, that's what I'm looking to do today. And if I don't get anything, I'm not even going to be trading. NQ coming in, testing yesterday's low here. I'd like to see something happen around these lows. Again, I'm not doing anything here, though. I have nothing that's very clear for me at the moment.
I'm looking at Viking Therapeutics, VKTX. They're down 10%. This is one of those best of breed data for GLP-1s. And they, obviously, the announcement of Merck's acquisition this morning's scared. It's not doing the stock justice. So now I'm like, oof, because this is going to be an acquisition. Big Pharma is going to acquire the stock, and it's going to be a premium, because not just GLP-1, like their NASH as well is like, whoa. So now I'm like, oof, do I open a trade up? But wow, Palantir is catching a major bid, up 3%.
Let's take a look at
Let's
that.
see.
Oh my God, that is a whipping candle there. Where's those all-time highs at? We're sitting 80.91. Yeah, PLTR just kind of going sideways since that Monday selling happened, and we've just it's kind of just a consolidation within that range this whole time. So I'm interested to see what happens with it. Having a strong morning so far. Again, NFP levels, you guys hear me talk about it all the time. That's sitting at 76.81 for December NFP high. So if you're looking for a level for Palantir to breach, that would be the level in my opinion. And
Dude,
look for momentum over that. What's up?
Adobe is just getting no love. They're
I
so
know.
overbought. I thought they'd get bounced from here today, but
Adobe's rough,
this
man.
is the past week, or like, what is it, 550 to, that's a 30% decrease. Oh, 18%.
Oh, and we're just
Jeez.
under all NFP levels, all of them. That's scary looking.
On Adobe or just in the
On
indices?
Adobe, I mean,
Oh yeah.
I can put more on. These are just all the ones I'm counting. I count the last 6 NFP prints, so it's only the last 6. There's definitely more from previous times, but it's a little scary looking. I gotta ask Paper what does it mean when we're under all of the NFP level?
Don't buy.
Don't buy. Oh gosh, that's too funny. Yeah, NQ taking a nice hit this morning. Again, I have no real clear indication for any shorts, so I'm not currently short or trying to long this yet. But some nice price action so far. Again, VIX getting that bump up again, so 1562. Would love to see it get over 16. We got over 14, got over 15. Would love to see that volatility keep creeping up. It just makes trades so much easier, so much more simple. And just, I mean, again, if you're a day trader in December, a lot of the time it can be like you enter a position, you set your stop, you set your, take profits, whatever, and you'll maybe leave the screen, come back, and market's in the same spot, man. Like that, it's happened a lot to me. So I want to see Coinbase get some love. But again, we talked about the consolidation it's in. It's like day 36, 37 of consolidation. It's absolutely ridiculous. I am just, I'm over it. I know something's going to happen at some point, but it's just a matter of when, right? And it's tough to know exactly when. You can try and keep your eye on flow and, maybe get an idea of where things are going to step in, but you got to wait for that break of structure on the charts and let the chart tell you, and act quick on it. But just rough to see that go sideways for so long here. I guess, though, I mean, it made big moves. It's just you see something like Tesla making even more massive moves, and it just keeps going. I'm like, Coinbase, get out of consolidation. What are you doing?
I mean,
But
Coinbase is just so tricky because
I know. It's a broker. It's a brokerage, man.
it's
They're
a
weird.
broker, but also like I shared my thoughts yesterday with my subscribers about this, where like if we're about to enter a euphoria state in crypto, Coinbase is going to be one of those names you kind of need to own because they make their buck on volatility. Like that's how they make their money. It's essentially crypto's unpredictable pulse, and during euphoria stage, nobody knows what's going to happen. It's going to be explosive upwards or downwards. Nobody knows. But during the last bull market, during the euphoria stage for crypto, like their free cash flow went from like $200 million in Q3 to a year later it was 4 billion. That's the kind of explosive cash printing nature of how Coinbase capital in a bull market's euphoria. So right now, I think it was I'm looking at my notes. Right now, free cash flow sits at $1.2 billion. If they experience a similar 20x, which I don't think they will, that's wild. But let's just say they go close to half that, 10x. They're going to be printing like $8 to $10 billion in free cash flow, and that's where it's going to start getting re-rated because you can't. When you're printing $8 billion in free cash flow, even though it's cyclical, you can't be at this valuation. So that's why I do think Coinbase will hit $600, especially when you have to factor in the free cash flow explosive nature of what the crypto volatility is going to cause for Coinbase's fundamentals. But their stock price is frustrating. And that's why I do think Robinhood, you get a similar type of profitability within crypto's volatility without having such wonkiness on their fundamentals, that they have a high floor because they're exposed to crypto, but they're not all about crypto. And I think that's a big benefit for Robinhood shareholders versus, I don't know, Coinbase shareholders.
Yeah, 100%.
Wow, so Tesla is continuing pulling back.
Yeah, she needs it.
Yeah,
She
for
needs
sure.
it. Makes sense to me. Yeah, NQ coming in. We are under yesterday's lows, coming down. I have a spot where we could see a bit of a sweep under these lows of 205.50-ish. So I'm watching to see if we take that low and then reclaim it to the upside. And ES holds higher lows in the same area made from yesterday. And then I also have this 0.5 fib from what is that? Friday's range, Monday's range. That big range we had on Monday. I took the range there, drew the 50% retracement of that, and that's exactly what we pulled back to yesterday. And that was actually part of confluence for my morning longs yesterday. So we came down to that area, retested, held, and we're moving back up and got a change in structure. I got pull back to the area I wanted, and we caught a nice long there. But those 50% retracements, especially on a big move like that, and you're kind of guessing, okay, like I know we could dip today, but where the hell could we dip to, right? It's like a lot of the time you're going to pull back to at least that 50% retracement of whatever big range you traded in there, and that's what we saw yesterday. And now we're just trading right back around that. That 0.5 sits at 22,255 on NQ. Obviously, you can match that up if you're watching QQQ. On whatever charts you want there, but watching that, we are under it right now, but not with enough momentum for me to confidently decide like, okay, we're trading under this for the rest of the day, So I'm watching the price action around this area, definitely expecting some buying to go on, but not any action from me yet. I'm probably sitting back and chilling for the most of the day.
Looking at what else is, I don't know. It's kind of returned.
Your
back
Apple
to the,
puts might be up if you took them. Your Microsoft ones are definitely up if you took those.
I know. I mean, Today's just a Palantir and Nvidia day. It's
Yeah.
kind of crazy. Those are just the names. Like Nvidia's up 4%, Palantir is up over 3%. Like there's definitely some volume returning back to like those winners, which is nice to see. But also, I think a lot of people were hoping that that pullback in Palantir was a real one, and they potentially can like add if it gets back to like euphoria valuation towards just a premium valuation. But clearly, it's not letting us happen. That's not going to happen. But I also do think Palantir is one of those names where there is so much cap gains at risk due to like if you invest in Palantir at the beginning of the year, you 4x your investment essentially. And if you invest in Palantir in the beginning of the year, like you just don't dip your toes in. Like you fully believe in their concept. So you probably have a decently sized position when you began it. So now that decent position is like becoming way overweight, and that capital that you just gained throughout the year is something substantial enough where cap gains could come at play that you don't want to really sell it. So this is one of those names that could probably catch a bid throughout the rest of the year, but could be a key one casualty ahead of their earnings because they're going to have to produce not just like Nvidia like earnings. They have to like produce far superior than what Nvidia has been producing the past 2 years of being expectations. And that's a tall mountain to climb for Palantir. And I think it's unfair for them to like have the expectations. They have to grow top line close to 40% while having 30% margins. That's a rule of 40 score of 70. But I do think that's kind of where the place we're at right now into Palantir's earnings next cycle, where they have to produce unicorn like numbers. And that's tricky. It's difficult.
Absolutely. I'm just setting some levels up on NQ and some of the futures, but again, I do not have too much I'm gonna be doing here. Nvidia, nice pop right through that NFP low 134.02. That's getting some traction out of that consolidation from the morning there. Like to see that because we've seen Nvidia get a little beat down lately. No real, you could argue it's a break of structure on the daily for sure, but for me, no real momentum losing out of this range. You know what I mean? And we're still above all these NFP levels catching bids. So even with how nasty Nvidia's kind of been over the past week or so, I haven't completely written her off because the price action still got that holding price action, right? When I'm like really concerned about something, I want to see that fast price action down, really fast momentum going through levels, right? Not this teetering price action that's back and forth, that's trying its best to hold, and that's still what I'm seeing with Nvidia. I'm not seeing that nasty fast just momentum through levels, right? Of course, we're going to see that maybe on the intraday charts, but when I'm looking at the daily and looking at this range, I don't see what I would want to see if I was, let's say, short, right, looking for a retest of $100 or something. I'm definitely not seeing what I'd want to see, at least quite yet. So just keeping eyes on there, but it's probably.
I mean, it's one of those things where you can't be, if you're bullish on AI, you can't be bearish on Nvidia. It's like that's doesn't make sense. Like, so that's why I think there's a difference between bearish on Nvidia than also not being participating on Nvidia's stock price action. Like I'm very bullish on Nvidia still as a company. However, I did sell my Nvidia shares last week. So I do think like that's the kind of thing where it's like I just rather use that capital elsewhere for the AI theme, and I'm still just as bullish as Nvidia, but like I don't know if it's going to really return below $100 anytime soon.
Yeah, we got a special guest. You guys know and love this guy, Mr. Einstein himself, Peter, my man.
What's up, team? How's everybody doing?
Doing great. Another great morning. It's a big day. FOMC. How's the floor this morning?
Floor is actually pretty busy, I gotta say.
Yeah?
Yeah, it is. It's we were supposed to have an IPO that got canceled. A lot of guests here. They're celebrating this Brazilian potash company, and then a lot of sort of Hollywood fever, I think, and also everybody's getting ready for the Fed, trying to see the market. You know what? The market is slightly indecisive. Finally, look, we're seeing the Dow finally reversed. It was kind of an odd, right? We've actually had, 6 trading sessions with the Dow down. It was the worst performing Dow since 1978, which is an odd thing. 1978, the Dow was trading at 600 points or something. So I don't know how they can make it comparatively judge the Dow in 1978 and now. But anyway, Dow hit 45,000 and just turned over. My gut is it's how the Dow is, it's odd, right? 30 stocks that are, a couple of them are very heavily weighted in the index, right? And so, one stock can completely turn that index around. Obviously, I think it's United Healthcare because of the assassination of the CEO, and I think it's a couple of I think that was what it was. Nothing's bad in Boeing, nothing's bad in Pfizer. Those are the other two highest weighted stocks in the Dow. So I'm not really sure why it's sort of gotten heavily hit over the last number of trading days. But what? Look, people are maybe getting out of the industrials and getting into Nasdaq because you'll notice when the market itself goes down and and there's no fresh money coming into the market. Well, then you sort of get the sense that people are bailing on the market overall. But when you see one index get sold hard and then other indexes rally, so we've seen Nasdaq. Think about last week, right? Nasdaq hit 20,000. That is an all-time record for the Nasdaq, right? We know the Magnificent Seven and the NQs and the futures if you're trading those, and the Nasdaq 100. Obviously, you're seeing Palantir go into the Nasdaq 100, and there was what was the other stock, Jordan? One other stock.
Axon Technology and MicroStrategies.
Which was the first one? Oh yeah, right. MSTR. So those two, right? One a Bitcoin play and Palantir, right? So, but you're seeing people. It felt like people are getting out of the industrials and getting into tech again. So I think that was what that rotation was. And rotation's healthy in markets. We saw it over the last 6 months where you saw people come out of one index, people getting out of, look, there was that month in July, I think one time in September, when you saw the actual tech sector get knocked down, but you saw the Russell, go to record highs, right? So Russell is obviously mid cap, small cap. There's a lot of technology in there, a lot of AI, smaller stocks than like Nvidia. People didn't want to pay top dollar for Nvidia, so they were looking for some gems in the Russell that gave them exposure to AI and to tech, and so they were getting out of the high flying names where they had good profits and getting into some of the smaller mid caps, small cap stocks. So I think that's where you see, when you see rotation, that's healthy. What are we doing today? We got the Dow's finally reversed. You got the Nasdaq. I mean, you got the S&P is sort of anemic and flat. All eyes are obviously on the Fed today. We've got, I think, an 88 or 90% chance of a cut. But, yesterday there was all this chatter about, whether the Fed should go into pause mode. And, in 2025, the characters who I talk to think like Dan Ives, who's one of my guys who I speak to every week, who's the best number one tech analyst in the world, in my opinion, believes that there's going to be another, one full basis point cut in 2025, which that's what he felt that the market needs. So we'll see what happens.
So do you think that I feel like right now the breadth wasn't widening the past week or two, and I think that's anticipating a more hawkish tone from Powell today. So my take is like I think that's overblown. It's not going to be as hawkish as people think. I think IWM is where you want to be the rest of the week due to that breadth tightening the past couple weeks. What's your take on what kind of tone you anticipate from Powell today?
It's so hard. Look, there's two things. There's what Powell is going to say, and then how is the market react to what he's going to say, right? That's always the complicated part. We can have a really good opinion and actually be right about what he says, but it's a hard call sometimes. There's so many different players with so many different postures in the market that, you could be right about which posture he's going to take and completely be wrong about how the market's going to react to it. So, look, what do I think he's going to say? I think he's going to talk about it. Look, and I'm a huge fan of him. I think he's done a great job, and I think we're in the situation we are in the markets where it is because of the way he's played the game over the last couple of years. So I'm a fan, and it has nothing to do with politics. But, at the end of the day, he's probably going to talk both sides of the game. He does not want to throw a wrench into this market after we are up 27% and we've had a really great year. We've only got 2 weeks left. Let's also be clear that think about who's out of the market already, right? Mutual funds shut down at the end of October. Hedge funds shut down at the end of November. So the markets, even though today we've got Fed, tomorrow we've got GDP, and on Friday we've got the S&P rebalance, right? The Super Bowl of trading, right? The largest S&P of the year. We've also got the option expiration year end, which is going to be huge, right? So we're already seeing insane volumes for the closing bell, right? You guys know I've spoken about it with Jordan before. One of the things that I trade are market on close, right? Those are the imbalances that come into the market. And we get to see them at 2 o'clock. You guys get to see them at 3:50 if you subscribe to Bloomberg. And the general investment public gets to see them at 3:50 also. But we're seeing crazy volume. Like yesterday at one point, we had $4.5 billion for sale, dollar notional value in the S&P 500 alone, right? And we had that today's Wednesday. We had it on Monday. We got as big as $4 billion. Yesterday we got as much as $4.5 billion. And so while that's a lot of could be a number of things. It could be option, offset plays. People are big in the option and they need to hedge themselves up. It could be market makers who are offsetting, who are big at the ETFs are trading really aggressively and they need to buy or sell equities to offset their positions, right? To hedge themselves up. It could be that. It could be any number of things. It could be all, but for all of that amazing volume that we're seeing on the sell side, people are buying it. The market did break both on Monday and Tuesday from 2 o'clock to 4, but not relative to $4 billion. $4 billion is substantial, right? I think the biggest ever that I've seen in my career was about $8 billion for sale on the close. $4 billion is a big number. Yet the market broke, maybe it broke 10 handles on the S&P, but it did not break sizably relative to that dollar number. That means there are bids in the market. There are a lot of people still buying this market at these valuations, right? And I think that the Fed knows all about that. The Fed knows that there's a lot of enthusiasm. There's billions and trillions of dollars on the sidelines, right? Still people who are not confident enough to put their money to work in the market yet. So look, I think Jay Powell, that's a long answer to your Fed question, but I think Jay Powell is going to talk about unemployment. Okay, he's gonna put together a really positive scenario about all the good things he's done, right? Where we're at, about payroll, about unemployment still being at 4.1, how our trajectory to get down to 2% on inflation is pretty darn close, right? And that this year, he's been able to, that I think he dropped the ball probably in July, when we finally got our first cut. You remember the first cut that we ended up getting a 50 basis point cut, caught everybody off guard. That was because he probably missed the ball. We had that bit of a sell-off in July. Then we had that big sell-off, the Black Monday when the Japanese stock market raised interest rates. That Monday we came in, it was down 256 handles in the S&P, right? And I think the Fed missed an opportunity to cut back then. And then he didn't wait until whenever he did it. What was that, mid-September or October? So I think he missed one opportunity to cut rates when he didn't. But otherwise, I think we're on track. I think we're going to get a cut today, and then he's going to talk about what 2025 looks like. He's going to probably mention Trump a little bit, and that he's staying on, I think, till 2026, even though, that was the first question they asked Trump in his interview was, are you going to dump Powell when you get the chance? And he said, he was indecisive about that. Or maybe he said, yes, he is. And then Powell stepped in and said, I'm not leaving. No matter, they're going to have to drag me out of here. So.
No, I mean, I appreciate the long-winded answer. Like, that's why I asked. I want to pick your brain. Like, you have so much knowledge. And I do want to ask one last question before we hop off is, how is the environment different this time than it was this time last year, entering the new year? Is it more, say, bullish? Is it more euphoric? Is it more relief? Like, what is the environment entering the new year compared to what it was like this time last year?
Good question. You know what? I'm trying to remember what the end of the year looked like last year. As much as I have a photographic memory, I can't really remember it that distinctly. But you know what? I think, look, yesterday, last year, what did we close out the year up 22% or something? So we did have, 23 was a much more roller coaster year than 2024, right? I think we've had a much more solid foundational growth in 2024, right? The bulls have been much more in charge this year. As I think I mentioned to you before, literally, if you had 7 fingers on your hand, we've only had 7 basic pullbacks in the whole year of 2024, right? We had a reasonable pullback in April, after the best quarter since 2019. We had May and June. Everybody was talking about a recession, depression, yield curve, inverse, death cross, all that crap, and that never happened, right? We had a little bit of a pullback in July. We had August 5th, that Black Monday, right? We had the first week of September, which is the worst week for tech since COVID. And the second week of September was the best week for tech since COVID. We had a pullback on October 5th. That's literally 5 to 7 times this year that the market has sold off at all. And each one of these things was amazing buying opportunity, right? For all of the high-flying stocks that have been trading on the record. Look, we've had 58 record highs this year in the S&P 500. That's insane. I don't even know how many trading days there are in a year. 200, right? So, that's kind of nuts. And
just over.
Right? Exactly. Right? Is that what it is? It's right,
like
a couple hundred.
252, I think. 258, something like that.
Right. So 20%. We've had our days that we close out at record highs. Right. That's unbelievable. And also, it's like, why would people always ask the question? You're seeing Nvidia. Look, yesterday. This is a perfect example of mainstream media being so full of it. For the last 4 days, all they've been talking about is that the game is over. Nvidia, it's all been just a bubble, blah, blah, blah. We actually entered bear territory with Nvidia yesterday, which is an old term that means that we are 10% off the record high. But they don't discuss that 90% of these days over the last 2 years, in February 2023, Nvidia was a $108 stock. In February 2024, Nvidia was a $900 stock. And we've had 5 opportunities this year. If you did not want to pay the top dollar for Nvidia, well, you know what? In April, it got down to 724 from 900, right? In August, the same thing happened. So you've had 4 opportunities, maybe 5, where you could have bought Nvidia at a 20% discount, right? But when the stocks do come in, people run from the movie theater screaming, fire, fire. They don't realize that nothing has fundamentally changed. When markets, at least this year, when the market reversed this year, those 5 or 6 times, they were one-offs. They were 1 day or 1 week, right? They were not that the market and the situation had changed at all. So I always tell people, look at the stock. If things have not fundamentally changed, it's like when Nvidia last Monday, right? They threw the baby out with the bathwater when China attacked Nvidia for monopoly practices, right? Yesterday they started touting this Nvidia is in bear territory, and now Nvidia is bouncing back, isn't it? Is it up today?
Yeah.
Yeah.
Substantially. Yeah.
Yeah, it got a nice pop at open, actually, really nice pop.
Okay. So that's a perfect example that, that once again, the sell-offs that we've seen, we saw that with Tesla, right? When they had that conference about the autonomous driving car 2 months ago, and Tesla got sold off $70, and it flatlined for like 3 weeks, and everyone's saying, the game is over, the stock is dead, blah, blah, blah. And then the earnings came out. They were better than expected. The stock was up $13 after earnings, $50 the next morning, and it's gone up 100 points since then. So, everybody should do their own homework. Everybody should not listen. The mainstream media just loves to catastrophize. It's a new word I made up this year. They love to catastrophize markets. It's the greatest day ever, the worst day in 9 years, the greatest day in 9. It's such horseshit, excuse my language. Yep. Do your own homework, study the stocks, and if you like a stock, and watch it, and find out the people, the process, the productivity of the stock, and the profitability, and the people. Right? If those things have not fundamentally changed, then if the stock is on sale, go buy it.
I mean, you brought up a great point. Like old school media is kind of dying. They open the door for new media, which is essentially like the show, streaming, Twitter, like everything else.
Exactly. Look, you guys are traders. Anybody who has actually, skin in the game, right? Who are like you guys, right? Or whether it's Twitter Spaces or whatever it may be, right? Those are people who have skin in the game. Who, when they talk, look at I'm standing 20 feet away from Kramer. Think about Kramer for the last 2 years, right?
Dude, this is why I love Peter right here, dude. Peter's such a G. I love this guy. Oh my gosh.
I'm standing 20 feet from him, right? To the point where they had the inverse Kramer ETF. I mean, let's be real. So look, if you look at stock, you guys are actual traders. I love the fact that think about you guys as traders. When you get really familiar with the way a stock trades, look, there's some things I always talk about it with my partner David Green. For some reason, there are a couple of stocks that no matter how he trades them, he just can't make money in it. So you know what he did? He stopped trading them.
Yeah. You find what works for you. It's just like a car. It's just like anything else, right? You got to find what works for you, and find a ticker, learn the ticker, learn the emotion of the way it moves, the way the candlesticks are, right? Like everything about the ticker. Because me trading Tesla is completely different from me trading Apple, trying to swing trade with options, right? It's a completely different game, right? We're doing the same thing on both, trying to at least, but the emotion of the way the stocks move, the way Tesla moves off earnings versus Apple or this and that, right? Just everything combined, they're different. Yeah, they're different tickers, right? And you have to understand that, okay, these are kind of like people and they have emotions, right? They trade certain ways and you have to learn that. So something to watch out for. And like, if you're a trader in the audience, and I used to see a lot of people just trying to trade 10 different tickers at once, and hone in on one or two tickers, learn those two tickers, a little bit, and go from there. Then you can build out your watch list or whatever, right? But I see so many traders trying to focus on too much at once. It's a lot, right? Just focus on one or two, learn the emotion of those, get good with them, and then move on from that, right? So
100%. I love that story. I'll tell you one funny story. I had a friend of mine who was a bit of a drunk, and he, like, on his 9th DWI, he was in front of the judge, and the judge said, "Listen, buddy, this is the 9th time you're in front of me." He says, "You're either going to have to give up drinking or driving." And so the guy says, "You know what? Forget about it. I'll give up driving." Because he just didn't want. He didn't want to.
He said, "I'll walk. It's fine."
If you don't know when to stop trading a stock that's killing time, then you're just—it's like the definition of insanity.
Yeah.
Doing the same thing over again, expecting a different result.
Absolutely.
Anyway, you guys got to go. Always good talking to you.
No worries,
guys.
Peter. You're the man. Appreciate you so much, as always. Have a great day on the floor.
You too. Talk to you soon, buddy.
Yes, sir. Sounds good.
See ya.
All right. Well, everybody, we're gonna wrap it up. It's been a beautiful morning starting things off, but we got a big day to get ahead to. So, everybody trade safe. Again, follow your plan. Have some rules today. Don't over leverage. Don't go crazy, because this is the day that will take you out, and it'll do it fast. You'll blink and funded account gone, right? So, so be careful. Don't go crazy today. Especially if you're new, this is a great day to sit back, chill, watch, and learn, and just watch volatility, watch price action, and just familiarize yourself with the environment. So, again, appreciate everybody tuning in. I hope everybody has a great day, and yeah, we'll see everybody bright and early in the morning for another episode.